Hey, how's it going, guys? Welcome back. It is Sunday, March 1st, 9:17 a.m. This is my February month-end review video. I posted one for January and it seemed like a lot of you guys enjoyed it, so figured I'd do it again. Obviously, doing it for myself as well. I really like doing these monthly reviews versus just one big kind of review at the end of the year. I think, coming to the desk every, 4 weeks and sitting here really, just by yourself for a couple hours with no noise, no distractions, and really diving into your trading is really important. And if I had to guess, I'd say that maybe less than 10 or 15% of people do a year-end review, and probably less than 1% of people actually do a month-end review. And not just, looking at your P&L and saying, how did I do versus the NASDAQ? No, that's irrelevant, right? It's really diving into your trading, going through all your trade logs. How did you perform versus the opportunity set? Mistakes, finding patterns in your winners, your losers, and all that good stuff, right? So that's what we're going to do today. It might be a little shorter than January. I definitely traded a lot less this month, but still excited to, kind of dive in and look back at some of these. I've already done like a full kind of month-end review by myself, so this is just going to be me kind of narrating through it and going over it for you guys. So, yeah, without further ado, let's get into it. So I finished the month of February up 16.57%. And after the month of January, which was, let's see, 14.5%, that brings the year-to-date total to 33.53%. Down here, you can see I got a table here of my percent change on my equity every day, as long as the year-to-date with it, and then my overnight exposure each day. This is not really relevant to you guys, but this is just something because I want to go back and do a little study at the end of the year. But you can see there was only 3 days where I had any overnight exposure, and the rest of the days this month were spent going to sleep in cash, which was pretty nice. Over to the right, I have just kind of a custom equity curve here that I have built in. It just auto generates based off my year-to-date performance. So yeah, pretty smooth. One thing I do like about this equity curve this month, and I'm a really big fan of, and I'm happy to look back on, is most of my movement in my equity curve this month was kind of in like two clusters. So the first cluster was like the first week of the month, where I thought there was a lot of opportunity. We saw some volatility post like the silver blow off and the metals blow off, and then for the second and third week of February, it was really quiet. There really wasn't much. I don't think I alerted a trade for like over 2 weeks straight, because the market was super dry. We were chopping around, very little volatility, very little news. It was a really, really slow period, probably the slowest all year. And I'm pretty happy that my equity curve kind of just flatlined throughout that. And you could see it moved up just a tiny bit incrementally. And that was just due to just like small kind of cash flow breaking news trades that I take. And then at the end of the month, you have a bigger cluster of, kind of volatility where the opportunities really ramped up, where we had, the software disruption trade, right? Where like all the Anthropic headlines were coming out. There was some big opportunities there. As well as, the South Korea move that we traded at the end of the month. So we're going to kind of go back and, break this down kind of trade by trade and stuff. But I really am happy to look back on the month and see that most of the opportunities on my top opportunities list either took place in the first week of the month or the last week of the month. And really in between that, there was not much. And the fact that my equity curve kind of reflects that is like a big accomplishment in my book, because I really want to be most aggressive and trading the most when there's the most opportunity, and doing as little as I can and really sizing down when there's not much going on. And that's exactly what you see here. So let's get into my trades for the month. So these are kind of my system trades. So I explained this on Zoom briefly. I explained it in my last video for January, and I'll say it again. But I kind of have two kind of categories of trading that I do. One is going to be my systematic trades, which are, the mean reversions, the parabolic trades, the momentum trades, which there haven't been many of in this market. But these are the trades that I alert. These are the trades that I have really high conviction in, a lot of confidence. These are the trades I really size up for. So up here in this table is every trade that I alerted this month. Okay. And then I have a whole nother kind of category of breaking news trades that I do. Unfortunately, just the way breaking news trades are, I can't alert them. It'd be too hard for me to trade them, and it'd be too hard for anybody to follow them because some of them can last minutes. Granted, I don't really trade any of my breaking news trades with more than like 1% of my account usually. I'd say about 90% of my breaking news trades are less than 1% of my account. So not a single one of them were, unless a really rare kind of anomaly hits, will move my account meaningfully. A lot of those breaking news trades, and the purpose of them for me is to kind of just scratch that itch a little bit, right? It's really hard to sit there for 2 weeks and not click any buttons. And at the same time, if you sit there for 2 weeks and you don't trade a single thing, when a big opportunity comes up, it could be a little difficult, right? You could be a little, gun shy, whatever. So this kind of keeps me in tune with the market. It keeps me clicking buttons, even though it's not meaningfully moving my account. I still feel like I'm in touch with things, and they're just kind of make contact trades, just like stay in contact with the market, keep a feel for it, right? So very rarely, sometimes I think there was 1 or 2 news trades where I sized up to like 2% of my account for the position. Those are for like the really big opportunities, which I'll discuss and we'll review in this. Those can kind of move the account meaningfully if they go in my favor in a big way. But most of the time, if you look back at my equity curve, like this little tiny grind up in my equity curve here for like 2 weeks is just these breaking news trades that are really small, but they're compounding and they're just slowly adding up. And I kind of use these, obviously, like I said, to stay in tune, but to kind of build a cushion until my next big kind of system trade where I'm going to size up for. So yeah, that's kind of the purpose of them. And I think I had like high 30s or low 40s, 40 breaking news trades this month. And I'm not going to go back and like review all of them, but I'm going to talk about a couple of the highlights of them. And I think I have some stats saved here that I can mention. Yeah, I had 42 breaking news trades this month. I had a 46% win rate. My average win was 47%, and my average loss was 14.5%. So you can see I keep my losers pretty small on those. I'm really selective with my breaking news trades, and I'm really fast at them. So usually if they are losses, they're really small, and I'm pretty quick to cut them. But the winners definitely make up for the losers with close to a 50% win rate. So that's, positive expectancy there. But yeah, let's get into the system trades that I alerted this month that, you guys saw and I walked through. Started off with silver was the first trade of the month. It's kind of funny that I went back to silver because I don't know how many of you guys remember, but I had a really bad tilt day at the end of January last month. I think on the last day of January, I lost like 10% of my account in a single day. And that was just from some major tilt. I was short silver up at the highs. I was short gold, and I covered at the day that they peaked for a small win. And then, you had this huge massive down day in silver, and I didn't catch a piece of it. So I tried the long on it intraday, on the intraday parabolic long, and I just got chopped to pieces. I was trading AGQ, which was leveraged. My sizing was just not good. And it took a pretty big hit on my account. So I had to really reset for this month because that was like my first day of the year that like I really went on tilt. And I got over it pretty quick and actually came right back to silver for my first trade of the month. And I'm kind of happy about this because even though I went on tilt on it that Friday, I came back in and I knew there was still opportunity on silver. I just had to kind of size it appropriately and, be really objective about it and kind of forget about, the past and just kind of move forward. So this silver trade was awesome. This was just a classic kind of parabolic long trade. You had obviously the massive blow off day off the highs, and to come from that extended off the 50-day into the 50-day in just like one day is absolutely insane. This is like a total parabolic long opportunity. You could see the highest volume ever traded on this candle, 414% above average daily volume. Traded 511 million shares. That was total capitulation on this day. And I thought that the first tap of the 50-day was going to get bought. And this was a really kind of like I feel like I exploited this in a psychological perspective in a way, because my thought was that I could pull this chart up real quick. My thought on silver, and we can go to replay mode, was that anybody who was long silver on Friday on this big capitulation day, whoever got long intraday and was swinging it, they're probably going to put a stop loss at that low of the day. Most people probably are. And anyone who is late to short this or is shorting out of revenge is probably going to short it through that day's low as well. So my whole idea was that, okay, if we break that day's low and come into the 50-day and can't break down and flush further, first of all, you're going to get a lot of people to stop out, where big buyers can step in and soak up all those shares. And then you're going to get a lot of shorts that attack this that are probably going to be offside if this turns back up, which can cause a pretty violent mean reversion back to the upside. And my target for this was the decline in daily moving averages. And if you've studied any of these big parabolic blow-offs, a lot of them have a really strong bounce back before continuing lower. So that was kind of my thoughts for this trade. And I executed pretty much as perfectly as I possibly could have. You can see this was the low of the day of the blow-off day, and then we undercut it in the morning the next day. As soon as we reclaimed that day's low, I took my entry with a stop at low a day, and then I sold it on the gap up the next day for a 14% gain. Okay, this was, I think, 20% position size in my account. So this moved the account about like 2.5% on this trade. So this was a good trade to start the year. I didn't care about going for a huge win on this. For me, it was just a really extremely high probability trade where I had really nice risk to reward. My stop was so tight on this that I was able to size into it a little bit. I didn't want to size any bigger than 20% because I had just gone on tilt on silver like 3 days prior. So I didn't want too much kind of emotional attachment to it. So I found a good place to risk off of, and this kind of worked out perfectly in my favor. So yeah, just sold the whole thing. I didn't really sell in pieces, just closed the trade for 14%. And then the IBIT opportunity kind of came a couple days later. We got this big parabolic down move on IBIT. I think it was like 30-something% in like 6 days, $50 all the way down to 36. And we had a complete blowout day on February 5th. And you guys remember me being all over this, saying this was a huge mean reversion opportunity. Now, I'll kind of talk about this when we get to my trims, but we'll talk about the first 2 failed trades I had on this before the winning trade. Now, you know, most parabolic opportunities, whether it's a parabolic long or a parabolic short, are going to take multiple attempts. Very rarely are you going to nail it on the first try. Only a few times have I done that, but usually you're going to take a couple losses first, whether it's being early or just getting chopped up. But it's important to kind of stay with it. And that's why it's so important to size the first attempts appropriately, because if you take 2 big losses on the front side of the move, you're not going to be able to capitalize on the back side of the move. And even if you do, you're just going to be making up losses and maybe just get back to even. So it's important to, you know, not just continuously average down and size up bigger and bigger every time you take a loss. Like especially on the front side, because that's how you just end up kind of blowing up, right? That's like just martingale. So my first attempt on this was intraday. I thought it was in play on this big gap down on February 5th, and I tried it once we kind of sold off at the lows and had this little pivot. I added once we turned up and popped through the VWAP, and then we kind of stuffed, broke low a day, and I stopped out. So I just took the low a day stop on that. This trade was a 1.92% loss, and I took about a 1% loss on the account on this trade. So I was willing to risk a couple percent on the account, like 2 or 3%, which is, you know, what I made on that silver trade. That's kind of what I was risking on this trade. So I stopped out on that, and then I kind of looked for another opportunity to try this again. Now, you got to remember with these trades, the further they go down, you know, the better the opportunity gets, right? So I'm keeping that in mind. You know, even though I got stopped out and I feel a little bit defeated because I was early, I know that this opportunity is just getting better and better the further it kind of sells off. So I tried this again as we turned up and got this cross back above the moving averages, and we came off, sold off, and I stopped out at 36. So this was a 0.5% loss on my account. I took half the size that I did on the previous one, right? So I'm not sizing up as I lose. I'm actually sizing down, and I'm looking to pyramid aggressively and add to this if it starts to work in my favor. This is so important for these mean reversion trades. You cannot add as you lose, right? You have to size down as you begin to lose, and then as it starts to finally work in your favor, that's where you can get really aggressive, right? On the right side of the V. So I stopped out on this kind of 30 minutes before market close for 2% loss on the underlying and 0.5% loss on the account. So I'm at around a 1.5% loss on the account on this Bitcoin trade so far on this day. And then we get this huge flush out in the after hours, which is exactly what I was looking for to get big size. I took an entry right at market close on this wick right here. So right at market close, I just took a buy. And this was just a buy to trade off of in the after hours. I just wanted a piece of it to work around. And then I kind of posted at market close, you know, I'm getting a small piece here. And if we get a huge flush down in the after hours, I've studied and traded so many Bitcoin mean reversions in the past. And, you know, I've seen so many times where you get this huge capitulation day that gets this big leg down in the after hours, and then it just kind of reverses the whole move. So that's kind of what I was expecting, and that's exactly what we got. We got this huge flush down right into 60K, and we were really stretched at this point. and I added pretty much right as we got our first green candle. So I did kind of the first green candle reversal trade where I had my entry at the close. I added again off the 60K spot as we started to turn, and I pretty much was just going to use low a day as a stop as this candle kind of worked in my favor. So we kind of turned back up really hard, and seeing this was kind of a big confidence booster for me because this was kind of exactly what I was looking for, like a big flush in the after hours that reversed really fast. And this kind of confirms that most of the buyers were into the close. This was just a final kind of washout sell to stop out any smaller, longs down here at the end of the day. Luckily, I didn't get stopped out. I had a plan. And MSTR came like right into the $100 level in after hours as well. You had a big psychological level there. There was a lot of confluence here that I won't really go over right now, but just know that there was. And then as we kind of reversed all the way back to highs, I doubled my position. And this was just because, to me, this was a clear final washout capitulation. Bitcoin traded its highest volume of the entire day in the after hours at that 60K spot. So I was, super confident in this now, and I was just looking for any pullbacks to kind of build into. And as we got this really nice cross back on the moving averages and turned back up, I added again. And this was kind of around midnight or 1 in the morning. And then we kind of just slowly pushed up throughout the day. And my thought that was that the next day, a lot of shorts are going to be off sides and a lot of longs are going to probably chase this on the gap up. And then we get a big move at the open that I can just start to scale out into, kind of like silver. And then as we got the market open, which is right here, I sold a fourth at open, sold another fourth in the opening range highs. And then 70K was around my target, 72K. So I just kind of sold it all out at 70K. So this was a pretty good trade. This was 7.5% on this one, and I was able to get 100% of my account into this trade. So I took home a 7.5% gain on the account, right? So you guys can kind of see how I traded through that. Whereas I was losing on the front side, I was sizing down and keeping my losses small. And then as we got the right side of the V and the trend flipped, I started to really get aggressive, and I made back for all my losses plus more. So I took about a total of about 6% gain on the account on all the Bitcoin trades. So that was a Bitcoin parabolic long. And then kind of fast forward, I didn't alert another trade from February 5th to February 25th. I didn't alert a single trade until SNDK, which was on Thursday, I believe. I really like this high tight flag. Korea was going parabolic. I knew that the memory trade was tied to the Korean trade, and I thought if Korea was going to put in a silver type blow off move, that these memory names could really ignite higher. You also had Nvidia's earnings as a potential catalyst. So I tried this on this kind of wash. We had a washout day prior. We had the short report from Citron. We didn't break down further. It felt like a mini news failure within the base. Maybe we trapped some new shorts, shook out any longs that tried to buy the breakout day on Wednesday. Or Tuesday or whatever. So I thought, hey, if we gapped up the next day and broke the opening range highs, I'm going to try this. I'm not going to get super heavy. If it starts to work, I can pyramid into it and get bigger size. But if not, I'll just kind of get out quick. And so I tried it on the opening range highs intraday, and then it kind of came back down and took out my stop. And I took a 1% account loss on this. This was a 25% account position. It was like a 3.5% stop. So I was up pretty good on the month. This seemed like a big opportunity potentially. So I was willing to risk, 1% or so on this. So I got stopped on this. This was a loser. I alerted this one. And then KORU, this was the last trade I alerted of the month. This was a parabolic short opportunity on the South Korean ETFs. KORU is the 3x leveraged of EWY, which is just the South Korea ETF. And this was one that actually worked right off the start. This was pretty clean. We gapped up. I posted a message in the Discord, and I said that the window of opportunity is open today. I'm going to try it. I'm stocking it, whatever. And pretty much as soon we got just the textbook intraday mean reversion set up. Like I've seen this set up, hundreds of times on parabolic shorts. Every one that I've studied, there's like 80% of them kind of have the same pattern on climax day where they, push at the open, break the opening range highs, stop out. That's just a lot of shorts from the previous day stopping out. You get momentum buyers to chase the opening range breakout. And then when it fails, you have a lot of people offside. So I took my first entry as we broke prior candle low and came through the VWAP. And then I doubled my position on the low at daybreak and volume picked up. We had our highest volume of the day. This is just confirmation that we have a big reversal and a possible climax day. So I got pretty much full size here, as full size as I'd be willing to get here, right? If we had another blowout day up into the 800s, I'd be willing to get, double my size. So this was a 50% of my account on this trade. I was willing to go 100% if it had gone higher. for another day or two. But given that this was kind of like on the daily chart, sort of 4-star parabolic short, I was only going to go in with like half my account. If it was a 5-star, I would have built into like 100% position like I did on silver and gold, but it didn't quite get there for me. But still great trade nonetheless. We just sold off, huge volume sell off. I sold half at the red to green spot at the gap fill, which is typically a systematic sell for me. Anytime we fill the gap on a big gap up on climax day, it's a really great first trim spot. And then I took another small trim that I actually forgot to alert this. I took a really small trim as we kind of capitulated on big volume at the lows, and I didn't alert this, and this was my bad if anybody didn't get any more out here, but I thought I gave a great entry nonetheless, and hopefully people were able to manage it on their own. But I did take a small trim down there. It wasn't very meaningful. I think it was like 1/6 of the position. And then I ended up just stopping out the rest the next day when we kind of took out this, 150s area, just because, it didn't follow the silver precedent, didn't seem like it was going to follow through more that day. And I wanted to go cash into the weekend so I can kind of do review with a kind of level head and not have to worry about any positions. And I'd be willing to re-engage again if it does set up. But, it wasn't really 5-star extended for me. So I think it could keep going or grind up. Don't think it's ready yet. So I was happy to close that out. So I took a 3.26% gain on the account. I took a 3.5% gain on this trade, but I did roll some profits into some EWY1 DTE puts, which expired worthless, which was a 0.25% loss on my account. So I took that away from this trade because I kind of combined them into one. So overall, 3.26% gain on the account on this trade. And my stop was, by the way, high a day on this. So after I took my first entry, I had a high a day stop on this with a very high probability that it was going to follow through here on the opening range lows. So then we'll go into some notable news trades. I didn't really have any big notable ones in January, but there were some awesome ones here in February, specifically around like the Anthropic headlines. We saw some of these software names just getting crushed, like IBM, Crowd, whatever. And we got these headlines on February 20th. That Anthropic had this new cloud security that was obviously negative for Crowd because we had a huge downtick on all these software names right as this came out. You had a perfect bear flag on this. IGV looked super weak still. We engulfed the previous day, big wick above the moving averages. This was just textbook. And intraday, we got the first downtick here intraday on the headlines. I took my entry pretty much as soon as I saw it on the volume scanner. There was huge volume on this first downtick. And then I took a trim into weakness, and then we kind of rebounded into the moving averages. And I was like, okay, maybe this trade's done, but this seems like it could be a big deal. So as soon as we got another round of sellers on even higher volume, I took a re-entry. I rolled down my contracts to the 400 puts. And I think I said in the chat, like, guys, this could be like a really big move. Like, this is hitting the whole software sector. You're getting volume across the board. And IGV looks set up to roll. The indexes were rolling. It was just kind of a perfect storm for a big news trade. So I re-entry and rolled down there and just kind of trimmed into the big leg down. And I obviously missed the bigger fade into close, but I didn't really care. With zero DTE contracts, I don't care to sit through a 5% retracement, right? So this was a 6% move down on the underlying. I took home 126% on the 415 puts that I traded, and then 256% on the 400 puts. So this was a nice gainer on the account. I think like 2% or so. That was really big. And then PayPal, this was the Stripe acquisition rumors. This was another big one. The previous day, we had takeover interest on this. It halted up 10%. PayPal was said to attract takeover interest. I kept it on the radar just in case any further takeout or buyout or takeover or buyout news came. There was a lot of suspicious call activity from March. And then all of a sudden, the next day, PayPal lit up bright orange on the volume scanner with white letters, which is the biggest amount of volume you could get. I immediately thought this is buyout news. This could be a buyout. This could be massive. So I entered almost immediately. And then as soon as the headlines came out that Stripe was considering an acquisition of all or parts of PayPal, I added another options position further out the money. I traded it here off the volume scanner, and then we broke the opening range highs on this news candle as the news came out. And I took another entry on the 50 strike calls, and then I just trimmed into strength. I had a small piece left, and I wanted to see if this would go make new highs, but I just closed it and got all out. Because, with these breaking news trades, even though that news seems huge and this could be a buyout, here right now and then, you're really trading these for the IV spike, right? So if you get in early enough, the IV is going to ramp huge, because most people don't see the news till like 2 minutes after, you know, it really comes out or the volume scanner lights up. So, you know, I'm always pretty early, and I'm just looking for the IV ramp. Like, there are some news trades where the underlying doesn't move that much, but the contracts will just ramp because people start piling into these options, right? So I'm not so much playing the stock, but I'm playing the players, right? So basically, I get into the options pretty early. There's a little bit of volume on them from algos and stuff, some other really fast traders. And then as everyone starts piling in from seeing the headline on Twitter, they're a couple minutes late, they spike the IV up, and then I sell into them, right? I'm not alerting any trades, so it's like not, I guess it works kind of like how pump and dumpers would trade, how they'll get a position and then they'll alert it to their members, whatever. I don't do any of that stuff, but it's kind of a similar idea to where I get in early, the IV spikes, and then I'm selling into the IV spike. So I don't really want to stick around very long, because then that IV is going to come down really fast as people start taking profits, right? So I'm kind of playing the IV, and that's what I did here. As soon as the IV starts to really ramp and I can see it in real time, that's as soon as I start trimming. I'm not really trading the chart that much. I'm more so trading the options themselves. So I took home 100% on the 48 calls and then 131% on the 50 strike calls. So that was PayPal. Those were kind of the two big notable breaking news trades for me this month. All the other ones were just kind of really small base hits or small losers. So that was my trades this month. Crowd and PayPal weren't alerted, obviously. I mentioned them in the chat, but I can't alert those. They're just too fast. But those were all my other alerted trades. We can look at some stats real quick. This is just my system trades here. This is stats based off all the trades I alerted in my channel this month. I had 6 equity trades. I had a 50% win rate on them. The average win was 9.46%, and my average loss was 2.59%, with a total account P&L of 11.36% on the equity trades. And then I took one options trade that I alerted, which was the EWY 1DTE puts, which I had no stop on. I was just risking the premium. So I lost that full position, which was 0.25%. And then I did not trade any futures. I messed around with the Korean futures just to kind of get a feel for how the contract worked, but I didn't really trade them. I think I took like a $2 loss on my test contract, and I decided to just not trade the futures. They were pretty complicated, so I just stuck with KORU and traded that instead. So as far as P&L on the account this month, and what the tickers were responsible for, SNDK was 0.9% loss on the account. Silver trade was 2.78%. The Korea trade was 3.26%. My breaking news trades made up for 5.44% of my equity, and then Bitcoin was 5.99% as the biggest win for me this month. So that kind of is what made my month there. That's what it was made up out of. And then my review. Performance versus opportunity set, I'd say about an 8.5 out of 10. As far as performance versus opportunity set, I thought this was one of my best months in a while. A lot of very basic system trades, but I traded them very well and did not really miss any big opportunities this month like I did last month. I missed SNDK twice in January. I missed the big move on gold and silver. I sold my figure trade too early. Right, so I traded around my trades and traded my system significantly better this month, and I really performed well against the opportunity set that was present for me. I recognized pretty early on in February that this was not the market to go for home runs. There was really good high probability opportunities with edge, but it's just an environment where I'm happy to take my wins and move on to the next trade. And I think a lot of people kind of are in the same camp right now. Very range bound market, not the kind of market where you can let something compound for weeks. Unless you got lucky with, got in the energy trade or whatever. Most stuff, just you kind of get these big vicious couple days of continuation, and then holding anything past that is just negative EV, really. Very few things fall through for weeks, but many good multi-day movers. Tough to compound aggressively in an environment like this, but outperformance is possible with extreme selectivity. As mentioned last month, I could easily be up multiple hundreds of percents this year had I been trading the same way I did last year, which was excessive leverage via futures and options. My big goal this year was to focus on a much smoother and less volatile equity curve. That's the reason most of my trading this year has been via equity. Just astronomically easier to manage your risk and operate in a state of calmness. I can tell you the difference this has made versus last year is fascinating. Constantly operating at even keeled versus major emotional swings, and I'm sure this will be challenged whenever my first real drawdown hits this year. Personally, don't feel like I've had any huge wins this year yet, but just in the mindset of consistently stacking up base hits and building a cushion on my equity curve until a real super momentum and easy money market returns. that is when I get extremely aggressive and really try to start moving the count in a meaningful way. That is where, if prepared, you can make your year in a month or two of trading. I learned my lesson from the last day of January when I had that big 10% down day, and I did not have a moment of tilt this month. The only time I remember being a little frustrated was being early on the Bitcoin trade for those first few attempts, but I still, remained very systematic and focused on the objective at hand. So yeah, that's kind of my thoughts on the month. If I used options or futures on some of these trades, I could, like I said, could probably be up 150, 200% on the month, or I could be down significantly, right? Who would have knows how bad that tilt day, the last day of January would have been if I was trading options. It could have been a 30% down day at my account, right? That's what would happen last year. And then all of these trades would have just got me back to break even, right? So this year has been focused on keeping the drawdowns very small. So doing that, it's been pretty easy to just kind of get back to break even off a couple of trades. Just felt very calm all month, really focused on just capitalizing on the couple best opportunities, and doing as little in between. Top opportunities for the month was the silver parabolic long, the Bitcoin mean reversion long, and then the crowd and IBM trades off the Anthropic headlines, the AMD meta deal and pre-market, which I traded as well. Was not as big of a win as crowd and PayPal, but it was up there. And then, PayPal, Stripe acquisition rumors, mostly because I was just so ready and prepared for that and so quick to it that it was a massive opportunity for me. Not where I'd size huge, but that very asymmetric risk reward. And then the IGV capitulation and news failure was one that I missed. This was when Anthropic had that briefing that everyone was kind of anticipating. And it was supposed to be very bearish for software stocks. Everyone was saying, what software stock are they going to kill tonight or tomorrow morning? And we briefly broke previous day low, reclaimed and went red to green during the Anthropic live stream, and then software just rallied from there. And I thought that would have been a good trade on IGV. We had huge volume at the lows, failed breakdown of the previous low. I just didn't participate in it, wasn't quite ready for it, so I missed that one. And then the KORU parabolic short. Those were the top ops for me. Maybe a little bit biased, but I've gone through and I really could not find many other opportunities that fit this list. I mean, I was thinking of potentially like RTX or RXT on the Palantir partnership, but I don't trade stocks under $1. I try to never to, and pre-market breaking news trades on small caps have been terrible. So I don't know. I feel like this could be a little too hindsight, but maybe that could be up there. And that's really only the other one. So that was my month. Feeling pretty good on the year. Excited for March. Just trying to keep the drawdown small and really capitalize on those big system trades. That's it. Don't know that I have much else to say. Hopefully this, you guys enjoy this, took something from this. And I'm going to probably hop off now and get working on Sunday scans and spend the rest of the day kind of preparing for the week ahead. Have a good day. Good luck in the month of March. Wish everyone the best.